We were hoping to be able to 1031 investors into the next deal.
Of course.
And just given the market, we were not able to find a deal on time.
So what's your biggest frustration with the 1031?
Paperwork, right? Timelines. You've got these tight timelines. We just had an operator sell a property in Austin 2 months ago. I guess it's coming up on 4 months ago. We were hoping to, like every deal, we were hoping to be able to 1031 investors into the next deal.
Of course.
And just given the market, we were not able to find a deal on time. And so we've had to return all that capital to the investors. And that we're all subject to the capital gains tax. It is a matter of timeline, being able to identify a deal quickly enough, in not knowing what the future market is going to be like. We didn't want to go out there and buy a deal just to avoid taxes. It has to make, the deal has to make sense. And unfortunately, that operator wasn't able to make that happen in a really strange, still frothy Austin market.
Yeah. And I think that's like one of the biggest things that, you kind of run into with 1031s is that tight timelines, those asset, like kind constraints, those restrictions. And then like you said, the paperwork is big time. And that's why
Right.
we really, we love 1031s. Like when 1031s make sense, like that, go for it. Like for sure. They work really, really well for, upgrading and upscaling your business. But when you get to the point to where you, like you just said, when you're a motivated buyer, because you don't want to, like, that was a really wise move. Don't buy something because, the tax implications are coming in just because you need to buy something. Like you do not want to be in that position.
Right.
They literally target those people. You know this from real estate, right? They target people in 1031s like, hey, like come buy this deal that's way overpriced because
Exactly.
it's you're going to lose your money. So, and that's why we really tote the Deferred Sales Trust. I don't know if we've talked about the Deferred Sales Trust or not, but for those of you who don't know, a Deferred Sales Trust is an alternative to 1031. It works not only with commercial real estate or investment real estate, but it works for primary homes. It works for businesses. It works for stock. It works for crypto. We're doing a deal right now with a racehorse, actually.
Really?
So it's any highly appreciated asset. And what's unique about it is it's a totally different IRC code. So it's not 1031. It's actually 453. It's a seller carryback at its core, but it allows you to sell the asset, diversify into multiple different asset classes. There's no time constraints going into real estate. There's no 45 days to identify, 180 days to close. And there's no having to go from the same asset to the same asset. So you could sell a business and go into stocks and bonds and just, even a 10-year treasury yield if you wanted to right now, right? Like just kind of, you go into other currencies. You could go into crypto or businesses or whatever. It doesn't matter. And then when the time's right, you can hop back in and out of real estate. What's nice for syndicators is that when you do that, like you were talking about, right? Like how many millions of dollars do you think you've left on the table because you don't want to take $1031 under $1 million?
Right. Yeah. It's quite a bit.
Yeah. It's gotta be high because, and then you're
Right.
dealing with 50, amounts of 50,000, 100,000, 150 to 200, right? Which no small amounts, right? But when you start bringing it in, I mean, imagine if you could just like, hey, here's $5 million, like for a syndication. Here's $10 million for a syndication. We just dropped, I think, 10 million on a couple funds last like 3 months from people that had DSTs. So it's a super powerful strategy for anything that's highly appreciated that you're liquidating. So if you guys are interested in learning more about that, go to capitalgainstaxsolutions.com.